There are a number of cryptocurrencies on the market. I mean, the basic premises of what we're talking about is a digital currency created by blockchain technology. So, the most famous one, of course, is Bitcoin, which is mined. Computers solve puzzles, and by doing so, they earn Bitcoins, which have risen to very high prices. They seem to be reaching record high prices almost every week at the moment. So I think yes, there is cause to be wary of these assets for private investors. I think probably a lot of people are looking at the huge price gains that we've seen in some of these cryptocurrencies, and they're thinking that this market is only going in one direction. Well, it might continue to rise, but we have to acknowledge that there's a very big downside risk as well. And we have seen in the past very big price falls.
Exactly. Just how cautious should we be? Because you talked about massive rises, but there's always that big element of risk, especially when you don't fully understand what's going on. So is Bitcoin a risky venture?
It is, yeah. You just need to look at the price volatility to tell that. I'll quote Warren Buffett here: "Don't invest in something that you don't understand." That's kind of one of the basic tenets of investing. I'd also point to what the financial regulator in the UK said, which is don't invest any money in cryptocurrency that you're not prepared to lose. And that's really the bottom line, is that you might actually do very well for it. The kind of future course of these cryptocurrencies is very unpredictable, which is acknowledged by even fairly bullish investors like Tesla.
Cryptocurrency, blockchains should be completely safe, shouldn't they? But many people don't seem to trust the cryptocurrency world. Why is that?
Well, I think there's probably a number of reasons. One we've touched on is that they don't perhaps fully understand it. And if you don't understand something, then it's natural to be slightly, kind of skeptical about it. Obviously, there kind of have been, issues with kind of, Bitcoin being so anonymous, linked to, issues in terms of money laundering and obviously criminal activity. So that's one reason. But, on the flip side of that, at the same time, we've got central banks, manipulating, traditional currencies. And so there is, one kind of anti-establishment point of view, which is that actually Bitcoin and other cryptocurrencies are not subject to those manipulations. So, in some ways, they've got more integrity.
Elon Musk of Tesla has invested $1.5 billion in Bitcoin. I mean, he must know what he's doing, doesn't he?
Well, he's got a great track record, but I think it's fair to say that he's able to kind of lose a penny or two if it comes to that. Whereas for a lot of people that's not the case. And yes, that Tesla have invested some portion of their cash pile into Bitcoin, but if you read the nitty-gritty of their regulatory statement, even they are pointing to some of the risks involved in cryptocurrency. The fact that it might not ultimately be taken up by investors as a source, as a means of exchange by institutions. The fact that there are risks to the technology in terms of hacking, in terms of obsolescence, and also that we don't know yet what entirely the regulatory framework of cryptocurrency is going to be going forward. Regulators might start to take a sterner look at this area. So there are lots of risks around, and even some a company that's clearly as positive as Tesla is on the future of the cryptocurrency is pointing out those risks.
Is it winning acceptability elsewhere too? Because MasterCard and Mellon, they're now getting interested, aren't they?
I guess the thing that I always come back to is realistically, given how volatile something like Bitcoin is, how can it be used in the real economy? I mean, if you could just consider a situation where someone, if your employer offered to pay you a Bitcoin a year, well, at the moment you'd be earning $50,000 or so a year. What are you going to be earning next year? Well, we don't know. It could be $100,000. You could be doing really well, or you could be earning $10,000. Is that a risk that you'd be willing to take? Well, I'm pretty sure most people would say no, it's not. And so just kind of actually, there's a question of how much of this is, yes, the payments are superficially being made in Bitcoin, but then being translated into other currencies, and how much is this actually part of the real economy. And I think it's still quite a long way off being part of the real economy and being used, as I say, as a medium of exchange. And I'd probably also highlight just one other kind of, emerging risk, which I think is perhaps not fully appreciated as yet. Some interesting research that we've had very recently from Cambridge University showing that the amount of electricity that is used, the amount of electricity used by Bitcoin mining is equivalent to the same amount used by Argentina. And in a world which is increasingly concerned about the environment and ESG principles, you do have to question whether at some point investors are going to start thinking, well, hang on a minute, does this actually, conform with our own kind of ethical objectives? So, another risk there to consider as well.
China, of course, is pushing ahead with its digital currency, although it's one, unlike other cryptocurrencies, that you can actually pay for things with. Is that a more likely future for these kind of currencies?
Well, potentially, yeah. And China's not the only central bank that kind of is looking at this area. But I guess we again just have to go back to the kind of function of what people use money for and how they use money. And it is kind of buy goods as a medium of exchange. You get paid to pay your bills. And the reality is that money is pretty digital already. The money that you hold in your bank account, you look at it online on your mobile app, you transfer it using your mobile app. So you have to consider what additional flexibility something like a digital currency, kind of a cryptocurrency, gives over and above. And increasingly, because money itself has become so digitalized, that margin is getting kind of ever thinner. So we already live in a very digitalized monetary world.
Laith Khalaf, a financial analyst at Stockbrokers, AJ Bell, many thanks for joining us on The Agenda.
Pleasure.